Hey, what's up everyone? Welcome back to Beyond Income, where we cut through the noise and talk real money moves that actually hit your bank account. Listen, if you're in the US or the UK right now, I need you to pause whatever you're doing for the next 30 seconds and picture this. You pull up to the gas station tomorrow, look at the price on the pump, and it's dropped, not a few cents, but potentially a noticeable chunk overnight. Your weekly grocery bill feels a little lighter because shipping costs just eased. Your heating bill in the coming months, suddenly more manageable. And the stock market? It's doing cartwheels. All because President Trump just dropped a bombshell last night, a 2-week ceasefire with Iran, conditional on them reopening the Strait of Hormuz immediately and safely. Oil prices didn't just dip, they plunged. Brent crude crashed more than 13% in hours, sitting around $94 to $95 a barrel. West Texas Intermediate followed right behind, down to about $96. That's one of the biggest single-day drops in years. Friends, this is the kind of market-moving moment that can actually put cash back in your pocket, or cost you if you're not paying attention. So today, we're breaking down exactly what happened, why oil dropped so hard and fast, what it means for your wallet in the US and UK right now, who wins and who loses, and most importantly, what smart money moves you should be thinking about while the dust settles. Stick with me till the end because I'm also going to share a few practical steps you can take this week to turn this news into real income or savings. This isn't hype. This is the stuff that separates people who just watch the news from people who build wealth from it. Let's dive in. First, let's get the facts straight, so we're all on the same page. For the past 5 weeks or so, tensions between the US, Israel, and Iran boiled over into actual conflict. Iran had effectively blocked or heavily restricted traffic through the Strait of Hormuz, that narrow choke point in the Persian Gulf that carries about 20% of the world's entire daily oil supply. Tankers couldn't move freely, insurance costs skyrocketed, and oil prices spiked hard. We were flirting with triple-digit oil again, and everyone from truck drivers to families filling up their cars felt it immediately in higher fuel and food prices. Then, late Tuesday night, Trump posted on Truth Social that he was suspending all bombing and attacks on Iran for 2 full weeks, but only if Iran agreed to the complete, immediate, and safe reopening of the Strait of Hormuz. Iran accepted. Both sides are claiming victory, and Pakistan apparently helped broker the final details. Within minutes, the market reacted like someone flipped a switch. Oil futures dropped double digits. Stock futures for the S&P 500 and Dow jumped 2% plus in after-hours trading. Asian markets opened green and strong. It was a textbook risk-off to risk-on flip in real time. Now, why does this matter so much to your everyday finances? Let's talk real numbers, the kind that show up in your budget. Start with fuel. In the US, the national average for regular gasoline had climbed above $3.80 to $4 in many states because of the supply fears. In the UK, petrol was pushing £1.60 to £1.70 a liter in places. When oil drops this sharply and this fast, those prices at the pump usually follow within days to a couple of weeks, not instantly because refiners and retailers have inventory and hedging contracts, but the direction is crystal clear: downward pressure. Analysts are already saying we could see 20 to 40 cents off a gallon in the US and 10 to 15 pence off a liter in the UK if this ceasefire holds for even the full 2 weeks. That's real money. If you drive 12,000 miles a year like the average American or Brit, you're looking at potentially 150 to 250 pounds or $200 to $350 back in your pocket over the next few months, depending on where you live. For families with 2 cars or small businesses that run vans and trucks, it adds up fast. But it's not just the pump. Think about everything that moves by truck, ship, or plane. Lower oil means lower transportation costs, which eventually flows into grocery prices, Amazon deliveries, and even your favorite takeout. Inflation, which has been sticky because of energy costs, just got a surprise cooling effect. That's good news for the Federal Reserve and the Bank of England when they sit down to decide on interest rates later this year. Lower energy inflation gives them more room to cut rates without looking soft, and that could mean cheaper mortgages, cheaper car loans, and a nicer environment for your investments. Now let's flip it. Who actually loses here? Because every trade has two sides. Oil producers, especially U.S. shale companies and big integrated majors, are feeling the pain today. Their profit margins shrink when crude falls this fast. Energy stocks got hit hard in pre-market. If you own Exxon, Chevron, Shell, or BP in your portfolio, you probably saw some red this morning. OPEC Plus countries are also watching nervously because they were counting on higher prices to balance their budgets. Airlines, shipping companies, and any business that guzzles fuel, they're smiling. Their costs just dropped, which could mean better profits and, if they pass some savings on, cheaper flights and goods for you. Here's the bigger picture for your wallet in the US and UK specifically. America is a net oil exporter now, thanks to shale, so cheaper oil is a bit of a mixed bag for the national economy, but fantastic for consumers and manufacturers. The UK imports most of its oil, even with North Sea production, so this drop is almost pure upside for British households. Lower energy bills in winter, cheaper petrol for the commute, and a little breathing room on the cost of living squeeze that's been hammering everyone since 2022. But, and this is important, this is a 2-week ceasefire, not a permanent peace treaty. Markets are pricing in relief right now, but they're also pricing in skepticism. If talks break down after 14 days and the strait gets blocked again, we could see oil shoot right back up. That's why the next 2 weeks are going to be incredibly volatile. Smart money is watching every headline out of Tehran, Washington, and Tel Aviv like a hawk. So what should you actually do with this information? Let me give you the practical, no-fluff game plan I'd be running with my own money. Number 1, check your fuel budget this week. If you have a rewards card or app that locks in prices, consider topping up your tank at today's lower levels before any rebound. Small moves like that add up. Number 2, look at your broader portfolio. If you were overweight in energy stocks because of the war premium, this might be a good time to trim some profits or rebalance. On the flip side, sectors that benefit from lower oil, consumer staples, airlines, retail, and even some tech that runs on cheap energy, could see a nice tailwind. The broader stock rally we're seeing today is the market saying, geopolitical risk just dropped, let's party. Number 3, keep an eye on inflation data and central bank signals over the next month. If energy stays lower, we could get softer CPI and PPI prints, which is rocket fuel for rate cut expectations. That helps your savings accounts, bonds, and any variable rate debt you have. Number 4, use this moment to stress test your budget. Write down exactly how much you spend on fuel, groceries, and utilities every month. Then ask yourself, if prices stay 10 to 15% lower for the next 6 months, what could I do with that extra cash? Pay down debt faster? Boost your emergency fund? Throw it into a high-yield savings account or index fund? That's how real wealth is built. Not by chasing hot tips, but by turning macro events into micro habits. And number 5, stay informed, but don't panic trade. 2 weeks is short in geopolitical time. Trump has already said long-term talks are coming, and both sides are claiming victory, so there's a decent chance this turns into something bigger. But hope is not a strategy. Keep your investing plans steady, dollar cost average like always, and treat this as one data point in a much longer game. Look, moments like today remind me why I started Beyond Income in the first place. The world throws curveballs, wars, ceasefires, oil shocks, but the people who win financially are the ones who understand what it actually means for their day-to-day money and then take calm, deliberate action instead of reacting emotionally. So tell me, in the comments right now, are you seeing lower gas prices in your area yet? Do you own any energy stocks that just took a hit? Or are you breathing a sigh of relief because your commute just got cheaper? I read every single comment, and I love hearing how these big events are hitting real people like you in the US and UK. If you're new here, hit that subscribe button and the bell. We drop videos like this every week. No hype, no fluff, just straight talk on how global events turn into personal income opportunities. And if you found this helpful, drop a like. It really helps the channel reach more people who need this kind of no-nonsense finance breakdown. Thanks for spending the last 10+ minutes with me. I know your time is valuable, and I don't take it for granted. Whatever side of the Atlantic you're on, I hope this ceasefire brings a little relief to your wallet and a lot of clarity to your investing plan. I'll see you in the next one. Stay sharp, stay informed, and keep building that beyond income. Take care.